Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Ryan McCormack, Factor and Core Equity Strategist at Invesco, for instant market reaction to the Fed's comments on inflation and its course forward with interest rate policy. We'll also discuss weekly trends in the Qs and what sectors are leading the way. Ryan, it's great to see you as always. Welcome back to Trade Talks. Before we get into the Fed, let's get a quick weekly review of what you saw in the Qs.
Yeah, thanks, Jill, and it's great to be here as always. We was a pretty good week for QQQ and QQQM, up 1.25%, outperformed the S&P 500, up 30 basis points, and the S&P 500 value down 57 basis points. And that performance was largely driven by a big reversal in the equity markets yesterday on seemingly little news. We saw factory orders for May come in better than expected. A lot of that increase was driven by some higher prices and demand for petroleum-related products. QQQ was down by over 1.9% at the lows yesterday and rallied to finish the session higher by 1.7%, near the highs of the session. This follows Friday, right ahead of the long weekend, where we also saw QQQ down by over 1% and closed higher by 66 basis points. So, not sure if it's investors trying to take advantage of some of the chop, valuations that have come down quite a bit, or potentially positioning for a more accommodative Fed.
And if we take a look at the sectors, which ones led the way in terms of performance last week?
Yeah, so the value-oriented sectors in the red, we saw energy down by nearly 8%, and the lack of exposure for QQQ, that really drove the relative performance, or was the largest contributor to relative performance against the S&P 500. Materials, industrials, financials, all also negative, while for QQQ, communication services and the consumer discretionary overweights helped relative performance. As those two sectors were in positive territory for the week.
And at 2 o'clock Eastern, we got some more guidance from the Fed, keeping their policy intact with really their mandate is to fight inflation at this point.
Yeah, you look at the release itself, nothing all that new to report, but we saw markets jump following the release. Officials saw 50 to 75 basis points hike at the July meeting. That was listed as likely. Many of the FOMC, talks about the inflationary risks, talking about entrenched inflation, and we could see potentially more restrictive policy, which Jay Powell has alluded to on a number of occasions, and that they're going to be data dependent. I think beyond that, there was a couple of mentions of the University of Michigan sentiment survey where we saw long-term inflation expectations rise. From that, we look at sort of the implied policy rate, or what's baked into the market. And the rate is 70 basis points higher for the July meeting. So, another 75 basis points, not fully priced into the market, but pretty close. And further, the number of rate hikes sitting at about 2.7, so 2.7 25 basis point hikes. On this jump that we've seen in Nasdaq 100 following the release, not sure if the market seems to like the Fed's commitment to try to tame inflation, or this morning's economic data that's showing growth in the economy is starting to slow. We saw the ISM Services Index slowing to its low over the past 2 years. We saw orders lightening up. We saw continued hiring challenges, and maybe that shows that the Fed may have to reverse course on this hawkish stance. So could be sort of positioning that for a more accommodative Fed. We're starting to see potentially rate cuts being priced in for May and June of 2023. But that being said, Nasdaq has jumped higher by nearly 1% as of about 10 minutes ago at the highs of the session.
All right, Ryan, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.